Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, with an engulfing candle on Wednesday, the Australian dollar found further weakness into Thursday, following the Fed's delivered 25 base point cut from 4% to 4.25%. But the signalled caution after Powell stressed no widespread support for 50 base point, even though Trump's appointee, Stephen Moran, pushed for a larger move. This, the first cut in 9 months, followed weaker US labour data, with the Fed projecting 2025 rates around 3.6%, GDP around 1.6%, and unemployment around 4.5%, and inflation easing towards 2% by 2028. On the domestic front, though, Australia's jobs report offered no lift, showing a 5.4 thousand loss in employment, with unemployment steady at 4.2. So with the technicals, we can see the market is weighing on the support, and with the engulfing candle confirmed, could see a little bit more to the downside to around 65.85 and reassess from there, just in case it is deeper. Well, I'm not going to get overly bearish, as the trend is still quite strong and there's still a lot of work to do on the downside. So let's see if we can bounce off 65.85 or sink lower. Turning to the euro, the market is somewhat weaker as the dollar rebounds following the rate decision, but the ECB did keep their rates unchanged, signalling the end of its easing cycle, keeping long-term euro-dollar biased, slightly tilted higher, but nevertheless there is a bit of weakness coming into play. But I am looking at this trend line here, which is somewhere close towards 117.45. If we do see a bounce from there, then we could see a correction back to the highs that was printed overnight around 119, but I still have the call to 121. Looking on towards dollar yen, it did take out the level of 146.30 and got to the lows of near 145.5, and now rebounding and finding a little bit more momentum. Let's see how the market plays. There could be a bull trap up here, close towards the region of 148, and therefore could see another down test. Overall, I am bearish, as the bigger picture is still weak. Sterling finding a bit of a weaker play now, as we can see from that whipsaw price action and stab at 137. Looks down towards the region of 135.45 as a potential target, and reassess from there in case we do see a bounce. Wrapping up with commodities, an engulfing candle is finding a bit more weight on gold, as it now trades just through the level of 3,641. I'm not going to get over bearish. I still feel the bargain hunters lurking, and therefore could see a bounce back towards 3,700. Nevertheless, do be on your guard with the weakness coming into play here. We may see some stops going off, but bargain hunters, as I mentioned, are lurking. Then wrapping up with oil, still holding to a somewhat bullish bias. It's a bounce off around that 61.5. I do feel we could get up towards that top side of $65 a barrel and reassess. Well, that's a wrap. Thank you for joining me. And as always, look out the intraday report, and I hope you enjoyed the great start to the day.